Today is Monday, March 17th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, Alan Bush, ADMIS Senior Financial Economist, and Mark Bowman, ADMIS Senior Global Market Analyst. Starting with the grain markets this morning, Mark. What is the driving strength in the wheat market as we kick off the week?
Yeah, wheat is clearly the upside leader in the ag space as we now hit the second half of March. Prices are being led by Kansas City futures, which I believe has been driven by weather. Weekend weather brought a broad range of temperature swings across the nation's midsection. We saw heavy rains and damaging storms in the southeast. We saw a mix of rain and snow here in the Great Lakes region, while blizzard conditions impacted parts of the eastern Dakotas and central Minnesota. In the southern plains, however, conditions were dry. That combined with very high winds triggering some dust storms just further depleted topsoil moisture as the winter wheat crop is set to break dormancy now. Combine that with the speculative traders still holding a rather sizable short position in the wheat market has triggered today's price surge. Kansas City futures money managers last week sold nearly 9,500 contracts in the Kansas City market last week. That extended their short position to nearly 49,000 contracts. That's the largest short in 11 months. Although drought readings in the winter wheat growing areas is somewhat low at 27%, it's double where it was a year ago and it appears to be on the rise. So I look for a big spike in drought readings here over the next couple of weeks. July futures approaching this 920 or near 920. It's already 60 cents off the lows from earlier in the month of March, but I still expect them to go up and challenge the 650 level. That was a high from middle part of February. And not only dry here, but around the Black Sea region and eastern Ukraine and southern Russia also a drier than normal pattern.
And Mark, with the next major USDA report 2 weeks away, and reciprocal tariffs not kicking in until April 2nd, what will drive ag prices?
Well, we still got some South American weather to go through here. Bean harvest in Brazil is now 70% complete as of late last week, with most production estimates right around 170 million metric tons. The USDA held their forecast steady last week at 169. We've got hot, dry pattern returning into Argentina. This will actually be favorable for corn and soybean harvest as they're both still in the very early stages there. Heat dryness is expected to drift into southern parts of Brazil. Not good for the late developing bean crop there. However, much of the rest of Brazil is in a favorable pattern with a good mix of rain and sunshine there, beneficial for the development of their second corn crop. We'll also continue to monitor demand. We've got an open crush here shortly. I expect corn demand to remain strong, ultimately driving stocks back below 1.5 billion bushels, although the USDA held steady last week. And bean oil, look for more shift away from biofuel production and into exports. But gradually, the market's attention as we drift through the rest of the month will start to shift to new crop planting here in the U.S. and the March 31st stocks and acreage report.
And lots of concern out there regarding the stock index futures as we're well off the highs seen just a few months ago. What are both the technicals and fundamentals telling us about the direction of the market?
Okay, well, currently the fundamentals appear to be rather negative on stock index futures as the ongoing tariff situation remains. In addition, we have a variety of geopolitical issues overhanging the market, including in the Middle East. So often a change, though, in the technicals can be a leading indicator of a possible change in the fundamentals that are not yet apparent. Several downside blow-off indicators took place last week, including a very wide range or large range day to the downside on heavy volume, indicating some type of panic selling. Also, we did have some technical indicators improving with a trend line breakout to the upside on Friday, also with some follow-through gains today. So there has been a little noticed change in the fundamentals. That is the prospects of the Fed easing credit later this year, not at the upcoming meeting or even the May meeting, but possibly at the June meeting, and also there's a potential for some additional rate cuts. So the technicals have improved. The fundamentals apparently not improving that much, but with the fundamentals still as they are and the technicals turning a bit more positive, I think we are very low to making lows for the move, or possibly have made lows for the move down in the stock index futures.
Let's hope so. And Alan, what major economic reports and events are scheduled for this week?
Well, by far the most important potential market moving event is Wednesday with the Federal Open Market Committee announcement at 1 o'clock, and then the Federal Reserve Chair Powell's press conference at 1:30. So those are probably the most important event this week. That will be Wednesday. Thursday, the February leading indicators report, and that's guessed to be down 0.2%.
Mark Bowman, can we look at cotton for a minute? What has changed in the cotton outlook?
Well, one thing is export sales. We are seeing a trend towards better sales the last few weeks. Last week's number was the strongest since January 16th, and it was the strongest shipment since last season. We've got a lower dollar that helps. And all this talk about tariffs against China would raise more concerns about cotton, but that damage has already been done. China's already severely stepped back its purchases of U.S. cotton the last couple of years. And so far, sales this year are only 805,000 bales versus over 4 million a year ago. In the meantime, Vietnam has the most commitments this year at over 2 million bales, which is up from 1.08 million last year. And they seem more willing or eager to work with the Trump administration to commit more to U.S. purchases to avoid any tariffs against them. Also, another big buyer has been Pakistan, 2.1 million bales versus 1.4 million this time last year, and Turkey almost 1.5 versus 720,000 last year. So we've got a good trend in sales going, and seemed like we got to the worst earlier this year when we were at one point, we're running 4 million bales behind a year ago, and now we're only about 500,000 a year ago. Another factor is developing dry conditions in the U.S. The last week's drought monitor showed 33% of the cotton crop in an area of drought. That was an improvement over the previous week's 38%, but still pretty high. We did see an improvement in West Texas last week. They had seen some more like severe drought levels pick up and then kind of move back into just too dry. Southeast, Southwest U.S., California, and Texas all need rain ahead of the planting season. Still got some time to build some moisture in West Texas, but Southern Texas are right at a critical point. They should be planting now, and they need moisture.
Thank you. Thank you all. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.